roughly in June of '05, I guess sort of point, looking at November of '05, effectively as the peak of the residential real estate market. In June of '05, we started hearing from the Florida-based institutions that effectively they were pulling out, they were dumping all the liability, all the risk effectively on the nationals. We thought it was really a great thing. They could come in here, they could seize the market. Based on our estimates, east of I-95, there's about $12 billion in new condo construction financing that was put in place. Bank of America was number one, Wachovia, well, previously Wachovia was number two. And you had Coors, you had Fremont, both of those are sort of teetering as well, kind of as we go forward. So we figured, how are we going to sort of understand this, and how can we go to battle and try to paint the riches, if you will. So we made a decision to start tracking data on a residential side, much the same way that commercial real estate is tracked. So we've been collecting data for the last 3 years. And what we've realized very quickly is that the real play, first and foremost, is going to be greater downtown Miami area. To give you sort of a perspective, and then we'll kind of drill down. There's about a 60-block stretch. I don't know how well everybody knows that greater downtown Miami, but from the Rickenbacker Causeway, which is effectively 24th Street to the south, to 36th Street to the north, which is roughly about the Juliet Tunnel, from I-95 on the western boundary to Biscayne Bay on the eastern boundary. We spent 5 months, we went block by block, we drove past every single property that was 1 story or higher. We wrote down the address, we went back and looked into public records, whether it was condominium documents or property appraisal records. We tried to identify which really were condominiums and what wasn't a condominium. From there, we delved into condominium documents, we extracted information on an apples-to-apples basis in a huge, tremendous spreadsheet. Now, we then went and visited every new project that was in the process of going out. If they were not yet delivered, we asked for a copy of the condominium documents. At that point, we had an ability to extract the information. So what we've done, we put together basically what I like to say is quantifying a greater downtown Miami. And what I can tell you, looking at our research, nobody's contested it thus far. Some of the reporters have heard stories about it, have gone to developers, nobody's been contesting our information. Not to say it's 100% correct, but we tried to do everything we could to make sure that it was accurate. We have everything documented with public records. So, that being said, when you look at the data, you'll see from 1963, effectively when the first condominium went out to greater downtown Miami, to 2002, there were 11,500 units constructed, delivered, and effectively sold. From 2003 until 2010, when the last unit comes online, there would have been 23,000 additional units that were ultimately delivered to market. So we went from 11,500 to roughly about 34,000 over about a 7-year period. Now, what's been interesting for us to look at, and every quarter we go back and look at warranty deeds to try to figure out what building is closing, what's the square footage, what's the number of bedrooms, what's the price per square foot, what's the purchase price, so we can get a track of every building. So as we look at it, we have a real clear understanding. What we found is of the 23,000 new units that are in the process of being delivered, roughly 17,500 have already come online and have been closing for at least a quarter, at least 3 months. Of that 17,500 units, 70% were closed as of the end of the third quarter. We've just finished the new data. We'll be releasing it next week. We use it internally so we can sort of space out what's going on. So of the 23,000, 17,500 already been delivered, been closing at a 70% close ratio. Of the remaining 5,000 units, roughly, we're basically concentrated in about 10 different projects, and that's it. So when we talk about where's the market going and what are the opportunities, we're really finding that the hedge fund type of buyer, the institutional investor, let's call it, who's looking for 50% or more of a building, is really sort of running out of opportunities. And really where I think the play is going to be on the private equity side. And what's private equity in our opinion is basically a couple people get together, they have some money, they go out, they buy they buy situations. The 3 bulk deals effectively that are close to date have all been private equity plays. I've sat across from several hedge funds. We've been contacted by over 250 funds from all over the world. University Endowment Fund, pension funds out of Europe, Monaco to Singapore, Toronto down to Colombia. Everybody wants a piece of Miami. And that's sort of the good news. All this negative publicity, what it's done is it shifted the attention and the talking point onto Miami. If you're in Atlanta and you have a project where you're trying to unload, the chance of you being able to sway somebody to go to Atlanta over Miami is virtually nil because of all the attention focused there. The interesting part as we go forward, and I will tell you, all deals are starting to occur. We this week alone have taken 5 different funds from all over the United States in to look at product. We're in the process of, more likely than not, submitting 3 offers. They're going to be low offers, but we're going to be submitting 3 offers. Going back prior to the year and a half before that, we had submitted 40 offers. We had gotten 10 under contract, and effectively we closed our first one in December. So that was kind of an accomplishment. It was no easy task, let me tell you. But as we go forward, some of the issues we're sort of seeing on the condominium side, especially on the bulk basis, is that the Europeans are skittish about what's coming down the pipe for their economy. Many of them seem to think there's going to be a one-to-one trade on the euro to dollar. Whether it's true or it's false, it happens, it doesn't want to happen. That's sort of the psychology, that's the mentality. So you're seeing that push towards the United States. Some people say they can buy currencies, they can put it away, they just not have to worry about it. But many of them feel that they want to have brick and mortar. It's the old traditional type of scenario when things get tough and you don't know where to put your money. Where do you go? You go home and utility stocks, or you go with brick and mortar. Many people are tending to go with brick and mortar. On the U.S. domestic market side, the individual buyer side, we'll tell you we're overwhelmed. We have 35 agents who are running. We're putting up some big numbers. Fourth quarter was tremendous for us. The first quarter started tremendous for us. And you're probably asking who are these buyers, because we're not seeing them. 9 out of every 10 of our buyers is all cash. We have the ability to go in with these buyers that we're having come to us, and they're effectively buying all cash. We're looking at a 10-day close, we're looking at a 5-day close. The reality is the title company and the condominium association can't keep up with that, but it catches the seller's attention. If you're coming in with very few contingencies, and the only contingency is effectively the price, and that person sitting on the other side of the table has a cement block chained to his ankle as he's going down, he's just looking to cut that block, and we have people who somebody's coming there to take it. So it's been a very good market. It's turning. We have some real high expectations for 09. We're going to be expanding our office space in the month of February. We've actually doubled. And times are great, but we only have about a 2-year run. And my real concern, whether we get worried about when this market can come back, my concern is we're going to burn through our bulk inventory relatively quickly, especially in downtown Miami. So we're looking at trying to get more and more out of Florida, and we've taken steps in the form of setting up offices in Las Vegas and San Diego. Because the key is really to secure the buyers. We feel that we've secured quite a few buyers. Now we just need to find a new product. And the product's not there at a price point that makes sense. But they can come in, pull the trigger today, and make that investment. Because many of the funds are getting anxious, antsy. They want to deploy the capital. They want to play a game. They're willing to sort of take that chance. So it's a wild west right now. There's a bunch of gunslingers. Some people will be right, some people will be wrong. But there's definitely deals to be had, assuming the price is there.
Thank you very much.